Good morning. Welcome to IG's early morning call. It's Thursday, 22nd of June. It's Bank of England Day today. Let's take a look at the headlines as we wait high noon today here in the UK. It's widely expected we'll see an interest rate rise coming through from the BOE, but to what degree? Some economists saying it should be 50 basis points. Meanwhile, talking US interest rates, Jerome Powell returns to Capitol Hill today, and he said that 2 quarter-point rate rises still to come this year. Was a pretty good guess. And we're back on cryptos. Bitcoin doing well today. Coinbase rises on a crypto rally. Got Bitcoin up above $30,000 a coin. All this comes as BlackRock registers a crypto ETF. Let's take a look at volatility. Bumping along the bottom. That continues to be the message. We continue to see trade that we've not seen pretty much since February 2020. Indicating that it's very difficult to find an edge when coming to trading the markets. It's because the markets, well, I won't say they're going sideways. There is, in fact, now a fairly relatively hefty drop coming at the top of the hour for the FTSE 100. And I think this could well see a spike in volatility later on today. We're not quite as low as we were back on the 31st of May. But you can see here, once again, we've got an entire candle below the red wavy line here, which is a 200-day moving average, which is something that traders do like to see. It's an affirmative move. It means you should be short. I was talking yesterday about a short trade with a stop above the 7,600 level. If you took that trade idea, it wasn't a recommendation. We don't talk about recommendations here. What we do is we look at the charts and we look at ways in which we can possibly get a trading edge here. And I was talking about this yesterday. If you did take that trade and you were short, bring your stop in now to just over the 200-day moving average to around about the 75.50 level. 74.92 is where we are. This is the line of support to watch out for, that I think is a fairly weak line at 74.32. Instead, I'd prefer to have a price target down here at 72.03 if I was short on this going into the Bank of England interest rate meeting today. And if you get a trade below there, within levels not seen since November last year. We've been waiting for this. This lower high that we had here indicates to some that this market is beginning to curl over. I think the first line to watch out for will doubtless be a break of the 74.32, but that's relatively close. I think when you've got the markets potentially here looking for bad news, and when it's confirmed at midday today, it's a question of whether or not the Bank of England is going to go 50. I suspect it probably won't. It might only go 25. But there will be a big shot across the bows from the Bank of England to say, we're on a rate rising cycle. We've been there for 12 times. Today is the 13th time of interest rate rises, and we're expecting more going into the back end of this year, possibly another 100 basis points, maybe another 150 basis points, depending on the size of the move today. That's what's happening here in London. We've got a build-up on the downside coming through on many of the major European markets. German DAX now below the 50-period moving average at 15,914. Like the London markets, if you're short on this going in to the start of today's trade, pick up more on the downside here potentially. Price target is the blue line here, which is the 100-period moving average at 15,660 or so. MACD pointing lower there as well. And it's the same sort of picture here beginning to develop in the French markets. We haven't yet got a crossover on the MACD between the blue line and the red dotted line, but nonetheless there is a pickup on the downside, and you can see here this long-term rising line of support that we've got. We're very close to breaking that. Let me just expand that to show you where that appears. And that is the area to watch out for. If you're short on this market, stop goes above the 100-period moving average around about the 73.10 level. 72.01 is where we're trading at the moment. And I suspect we could well get a break of this rising line of support there. So short on all these markets in Europe going into the start of today's session. Overnight in the Asia Pacific markets. No trade in Hong Kong today because of the Dragon Boat holiday. But Singapore Straits Times inserted there. And you can see we're down across the board. S&P ASX 200, one of the worst performers, down 1 2/3% as at the close. The Wall Street close yesterday, losses across the board for all the major equity markets, all the major indices in the States, and it was the techs that took the major brunt of the declines, and you can see that shown there with that 1.2% drop for the Nasdaq. This is the Nasdaq index away from the recent highs at 15,266. We're currently trading below 15,000 now at 14,815. So short again on all these markets. But I think many looking forward to the Bank of England interest rate decision at midday. There is no doubt that they're going to have to raise interest rates. We saw the data out yesterday, red hot inflation across the UK, seemingly no let up as well in this number, with the speed of upside we've not seen since March 1992. If, like me, you can remember March 1992, John Major was in power, we were into a recession and inflation was rampant. We had mortgage rates at 15%. But the big thing about that is the fact that mortgage rates have gone up from 7% to 15%. Now, that was a doubling. Here we got mortgage rates going up from 2% to 6% plus. That is a tripling, and that is why it's painful. House prices are so much higher than they were proportionately to incomes at the moment. And that is all adding to the massive pain that people are feeling. We've got massive rises, as we've seen in utility bills across the board. That is hitting. Got big rise in food prices. And now we're getting a rise through in wages. And the Bank of England's got to put its foot on all this. And it's going to come through with an interest rate rise, 50 or 25. Let's take a look at the three reasons as to what's been behind this. First of all, the government's response to COVID, injecting cash into the economy to try and avert a crisis of confidence and help ease the pain of the supply chain shocks. This came after all that QE, you'll remember, where money was coming into the market to help us all through. We've got to pay for it. Then came the Russian invasion of Ukraine, driving up food and fuel prices and spiking metals prices and wrecking supply chains further. More help from the government. We've got to pay for that as well somehow. Finally, the UK economy has actually been performing better than expected. It's not seemingly, at the moment at least, entering a recession and is creating jobs at a record pace. That's certainly been the evidence so far. And this is pushing up wages. People are going for strike action because they want more money. We've got to pay for it. Add all this together with the amount of support that COVID piled into the economy during the COVID for furlough, etc. It's created an inflationary bubble that has to be lanced. So we've got to look at what's happening with the sterling trade. Sterling has been falling over the last 24 hours or so. Yesterday was actually a green-bodied candle, but nonetheless, you've got sterling off the highs. Why is that the case when you've got Jerome Powell standing up on Capitol Hill saying that the Fed was right to skip the last interest rate rise? Got two more rate rises to come at the back end of this year. Nothing like the 100 basis points of interest rate rises expected from the Bank of England. Sterling is down. Interesting to see what happens today when we get this decision through from the Bank of England. There was a bigger move, I think, for sterling against the euro. You can see here on this chart here, there's a big drop down here for sterling against the euro. This is a sterling first trade here against the euro. So sterling down. Currently trading at 116.14. Line of support to watch out for is the 115.62. Again, you've got to go back to work out or to find out what the Bank of England's going to do at noon today to work out how to play this. But at the moment, at least, certainly short sterling is winning out. How long that's going to carry on for today will remain to be seen, and we'll be live on the IG platform at 11:50 UK time this morning. I'll be with Richard Snow. We'll be talking through all of the options for the Bank of England and what it could mean for potential recession. Jerome Powell returns to Capitol Hill today to answer more questions from the US legislature about the US economy. When asked to comment yesterday on the Fed's decision to keep rates steady last week, Jerome Powell said, "We didn't use the word pause, and I wouldn't use it here today." Let's take a look at more about what's been going on. He said inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. Fed chair adding that a majority of policymakers see two more quarter-point rate rises likely by the end of the year. But despite the lowering of the consensus on inflation, opinions start to diverge about the need and the timing about additional interest rate rises. Jerome Powell was answering US lawmakers' questions yesterday. Other Fed members were sharing their views as well. Let's take a look at a couple of these. The Chicago Fed president, Austin Goolsbee, said at a Wall Street Journal forum that he felt the central bank was in a wait-and-see mode. If you don't see progress, that is an answer. If you do see progress, that too is an answer. The Atlanta Fed president, Raphael Bostic, also commenting yesterday, now suggesting the Fed would need to wait at least past its July meeting to decide on further rate interest increases across the US economy. He says if we simply press on with additional rate rises, we could needlessly drain too much momentum from the US economy. Let's take a look at the dollar basket. In today's session, we're trading at levels we've not seen since the 11th of May. This is money coming out of the US dollar. As we see the second day of commentary from Jerome Powell today. I want to take a look at what's happening with the euro-dollar trade, because this is definitely how to trade this. We are down a little bit today, but if you are long on euro against the US dollar, stop goes underneath this 50-period moving average down here at around about the 108.70 level. We're trading at 109.84, and there is the potential, I think, up to some of the highs that we've seen at 110.96 was the high we had back on the 26th of April. If you're long on euro dollar. If you're long, stop goes in fairly close underneath there to give you some protection. Now, let's take a look ahead of that second day of testimony from Jerome Powell. US stats expected today. Got weekly jobless claims and existing home sales. Expecting 262,000 weekly jobless claims. Initial jobless claims coming through at 1:33 o'clock this afternoon. Existing home sales expected to fall 0.5% in the month of May. Also at 3 o'clock this afternoon, Eurozone consumer confidence flashes forecast to marginally rise to a negative 17 in June from negative 17.4 in the previous month. Let's switch gears and take a look at what's happening with some of the corporates now. And I want to go straight on to take a look at what's happening with this chart here, which is that of Whitbread. Whitbread, the owner of the Premier Inn chain and Costa Coffee. It's risen 35% since the lows that we had back in January this year. So that is a 35% rise since the beginning of this year. A little bit of money taken down last couple of days. Whitbread first quarter total sales up 19%. Company says it's very pleased with where it is. UK accommodation sales at Premier Inn up 18%. The revenue per room is up 16%. UK food and beverage sales up 10%, 10% ahead of fiscal 2023's expectations. Trading momentum is strong, and we remain positive about the full-year outlook. There's this £300 million share buyback program. It says it's on track with 3.1 million shares purchased so far at a total cost of 103 million. So more shares expected to come off the market in that share repurchase program. Where do we go from here? Well, look, we're expecting a drop at the start today in the markets. In a normal trading day, and a trading day that might respond to what is essentially a positive update this morning from Whitbread, you might get an upside here at 34.01. There is a potential for upside, but I think the big drawdown in equities at the moment ahead of the Bank of England interest rate decision could well see a negative start to this company. And also for those that were expecting this company to report earnings, this is Mulberry, you're disappointed. It was due to report today. The group announced this morning it will report in approximately 1 week's time. What's happening there, I don't know. No further indication as to what's going on. Staying on the charts, just wanted to update you as well on what's happening with crude oil. Let's go first of all with the US crude. It's being held up by this falling line of resistance. Interestingly enough, there's been a bigger move for Brent, and yesterday we had a rise above and a close above that falling line of resistance. It's only a fractional rise, but nonetheless, technically it is a break, and we're an entire candle above that line, that falling line of what is now a support. Yesterday, crude oil inventories fell by around about 1.2 million barrels last week. Gasoline inventories up, but distillates falling by around about 300,000 barrels. Going back to the charts, just wanted to update you as well on what's happening with spot gold. It's interesting to see that as we've got money coming out of the US dollar, normally you get gold on the way up. Gold is on the way down. 1930.8, been talking about this and this line of support at 1910.9. Could that be the point at which we should then start to buy gold? It all depends on what happens with the dollar. But at the moment, at least, gold is on the way down for a, 1, 2, 3, 4, fifth day in a row at 1931. There's a lot of volatility in the crypto markets. Just want to end up with what's happening with some of these cryptocurrencies. I want to go with Bitcoin. Bitcoin is very difficult to trade because of regulatory concerns around what's happening with Bitcoin. So there are certain restrictions. But I wanted to show you this chart because in the last couple of days, we're very, very close to breaking this line of resistance that we had established back on the 14th of April, up at 31,040. 30,000, we're above 30,000 at the moment after a couple of days of really strong moves. Last week, Bitcoin hit a 3-month low. Since then, it's jumped more than 20% on news that BlackRock was filing for a spot Bitcoin ETF. Now, how do you trade that if you are not a pro trader and you don't have access to trading Bitcoin, or you don't want to trade Bitcoin? Coinbase is a good way to do it. This is the world's largest publicly listed cryptocurrency exchange business, and it's up for, as of yesterday's extended close, it's up for a 6th day in a row. It is hitting and finding resistance at the 200-day moving average, just above where we are at 57.97. But you get a clearance of that. We're on the way then up to the recent highs, up at 66.10, which were the highs that we saw back on the 1st of June. So Coinbase, as you might expect, a good way, a proxy to trade this if you do not have access to Bitcoin. That's it. What's time? It's 7:45. 15 minutes to go before the start of today's European session. Looking out for a lower start at the beginning of today's session after that lower close yesterday on Wall Street and across Asia overnight, as we go into the Bank of England's interest rate decision at midday. We'll be back at 10:30 with Charting Markets. I'll be back at 11:50 with Richard Snow, taking us through that decision from the BOE at high noon today.